All right, we are live on today's episode of Bricklet Buzz Live. How you doing, Matt?
I'm good, mate. How are you, Ray?
Great. How's your day been so far?
Mate, not too bad. Got out and had a really nice surf this morning. The swell was a little bit big for me and my Novice.
We've got some pretty big southerly swell hitting our shores at the moment.
Yeah, but mate, it was good fun. And yeah, I'm slowly getting better.
Yeah, I know you're getting hips better.
Yeah.
Hopefully we get a session out this afternoon.
Consistency is key. Yeah, I'm looking forward to it, actually. Yeah, if
Cool.
one thing lockdown has given me, it's time to get out and pursue a new skill, which has been surfing. It's been great fun.
And today we're joined with Bobby.
Yeah, so Bobby's here from, he's the managing director and founder of the Investors Agency, a specialist property buyers agency that focuses on delivering exceptional investment opportunities to their clients. They've purchased over $50 million worth of property in the last 12 months and have hundreds of very happy, wealthier clients due to their services. Yeah. They've been featured on the Australian Financial Review, Domain, the Australian Property Investor, and also your Investment Property magazine. So, Bobby, welcome to the Facebook Live vlog podcast.
Thanks for joining us, Bobby.
Hey guys, thanks a lot for having me. That's an awesome introduction. I feel like a superstar.
Mate, I'm sure you've got plenty of clients that think you're a superstar.
Let's hope so, mate. Let's hope so.
So, mate, just to get things kicked off, mate, when did you buy your first property?
Well,
talk us through it. Yeah,
wow.
talk us through it.
Oh, first property. First property was purchased in 2009. So what is that, about 12 years ago?
Yeah.
It was a Meriton apartment in St Ives.
Oh, yeah. I know the ones.
I can't even remember the name of the street, to be honest, but just parallel from the shops. A lot of the listeners might not be from Sydney, so we won't go into too much detail. That was actually a funny story. So we were living at home, me and my sister, and Dad pretty much said, at that age, we were blowing lots of money on stupid stuff. And Dad said, you either got to start paying him a bit of rent, or we move out and start paying our own rent, or we were really fortunate that he purchased that apartment for us, and my sister and I just had to pay off the mortgage. So look, I was in a very fortunate position that, got help from the parents 12 years ago to get into that property market. And yeah, I was very lucky to be in that position.
Great. Mate, do you still own that one?
No, I sold that one 2 years ago.
Interesting.
Oh. 2019?
Yeah, sold that one about 2 years ago and then put that money into Brisbane.
Gotcha. Mate, tell us about the Investors Agency and how it all came about.
Okay, so the Investors Agency, it's coming on to about 3 years now. And it came about from my passion in property and my passion in real estate. So as I just mentioned, I've got about 12 years experience in real estate on a personal level. And prior to the Investors Agency, I had a landscaping company. It was a landscape maintenance company. I don't have any interest in landscaping. I've never really had much of an interest in landscaping. But for me, my landscaping company was just a vehicle to pursue my property goals. So that's how I saw it over the last 10 or so years. And that company got to a point where I had no passion and had no interest in growing it anymore. And I was quite fortunate that it didn't really require too much of my time. And then having that free time just made me, I guess, I had about 6 months off where, I was going for walks in Manly and doing tennis lessons and taking dogs at the doggy rescue place for walks and thinking that that's going to help me sort of feel fulfilled. But I felt quite empty and didn't really have any motivation or strive to sort of get out of bed. And that's where the Investors Agency kind of came from, to be honest.
Yeah, that's interesting that you sort of already grew a business, a startup, into quite a successful company. And then obviously it had quite a significant amount of revenue coming in. So then from there, you were in Nirvana, free time, money coming in. But then as humans, we get to a point where we're like, well, we actually have to have a purpose to get up. We need to have something that we're looking forward to achieving, something that we're driving towards. And that's a lot of the reasons why successful people continue to work or continue to grow their business or whatever it is they decide to do with their lives. Because I think that, to live, you've got to be continually to try and achieve new and higher goals. You've got to keep setting that bar. What do you think about that, Ray?
Yeah, I mean, the thing for me, you talked about obviously you had this time where you had time to think and peruse and think about life. And you said that, you had this passion. This passion for property? Describe that for me. What makes you so passionate about property? What is it about property that actually, like with the investors agency, got you out of bed to do this?
Well, good question. I haven't been asked that question before, to be honest. And I don't think it's the monetary side of it.
Yeah. Because
I was passionate about property before I saw the monetary benefits that it can help people achieve. I honestly don't know. I think it might just be an asset class that I am quite comfortable with. I'm familiar with. But yeah, I just found myself like literally 4 or 5 hours a day. I was just scrolling on the portals, just trying to find deals. And when I would find a deal, I was just getting so excited, but 90% of the time didn't have the serviceability to do anything. I was like, got to get people into these properties. And it was just, I had that passion before I realized the monetary benefits that it can also provide people.
Yeah, it's interesting because, when I first started looking at buying additional property, because I started off in property on the development side of things. And I started looking at homes. I just started visiting homes. And I don't know what it was. I just loved going into doing these open inspections and seeing these different properties and how they laid out the different bedrooms and how the floor plans worked. And I would always go in looking and saying to myself, oh, how could I add value to this? What could be done to transform what's currently here? And that for me was what I really loved doing. And I used to look at so many different properties, a lot of them well and truly outside of my financial reach. But it was only when I started looking, even at the ones that were outside of my financial reach, that I actually started believing in myself that I could actually one day achieve that and actually buy it, because I started picturing it. I started seeing it and seeing myself owning one of these and transforming it and adding value to it. But property is an interesting thing.
Well, it's an integral part of all of our lives. We all need somewhere to live. So, everyone is either renting an apartment or paying off a mortgage, or they own their own home. So, we inherently all believe that we really understand property. But when you're thinking about it on the investment side, it's a completely different analysis. It's a completely different skill set you need to build up. So, mate, as a buyer's agent, what is a buyer's agent for all of our listeners out there?
Okay, cool. So a buyer's agent, we act on behalf of the buyer. So naturally, the real estate agent acts on behalf of the seller, and legally they have to do everything in their power to have their seller's best interest at heart. Our job is to act on behalf of the buyer. So a lot of buyers actually think that the real estate agent's on their side and then get frustrated when things don't go the way they were sort of expecting. We sort of explain to them that their job is to sell the house at the highest price, not sell you the house at the cheapest price. So on a real surface level, buyer's agent acts on behalf of the buyer. We do all the inspections, we do all the negotiating. Majority of the properties we find are off market. A buyer's agent who does have that network and database will find a lot of these off market properties. The investors agency is specifically data focused. So we don't specialize in one area. We follow the population, the infrastructure, the supply and demand, the economic changes, economic drivers. So we are sort of Australia focused, but on a surface level, it is just acting on behalf of the buyer to find that best investment property.
Great, mate. You said something interesting there. You said off-market. What is an off-market property?
So there's this new trend where off-market property is properties that go out to tens of thousands of people on a database. Which can be frustrating because a buyer will go to a property where they think is off market and they're literally waiting out the line out the door because there's a line there with 50 other people. Off market technically just means something that is not on the portal, so not on realestate.com or not on domain.com. As I mentioned, there is now a trend where real estate agents send it to their database as well. That's technically an off market.
Okay.
However, a true off-market, in my opinion, is one that doesn't go out to a database. It's either not through a sales agent, or it is through a sales agent, but they'll just call up a few of the buyer's agents that they have a good relationship with and say, hey, we have this property that's going to sell for $1 million, or we have this property that the vendor wants $1 million for. If we can sell it for $1 million, we won't take it to the portals. And then it's up to us to do that due diligence to see if it's worth that price or not.
Yeah, because a lot of work goes into listing a property, getting it prepared twice a week to have people coming into your home. You've got all these strangers walking in and out all the time. So I think for vendors, there is a much more popular theory that, well, if I can achieve the price that I want and not have to go through all of that rigmarole, then I'd much prefer to just sell off market, either through an agent or potentially not through an agent.
100%, that's right. And they're saving thousands of dollars potentially on the marketing, on the styling. They're not letting people in with COVID at the moment. I mean, nobody wants to hold people through their house with COVID. That's a given as well. Look, one issue we do have with off-market properties is a lot of the time the vendors are not realistic. So an agent would approach them and say, hey, will you sell this property? And the vendor will say, yeah, sure. If I get $1.3 million for it, I'll sell it. But every other comparable has sold for 1.1 or 1, and it's just not a realistic expectation. And it doesn't sell. So a lot of the time the off markets are like that. But you do find some gems in there as well.
Yeah, it's interesting because I mean, you added a couple of definitions for me personally about what an off-market property is, because I've been involved in off-market transactions. I've bought a couple of properties that way, simply either door knocking or through word of mouth. I found out about a property that people are interested in selling. I would do my own numbers. I come up with a number, and there'd be some level of negotiation. And then if you can, if the two minds can meet, you've got an agreement, off you go. But yeah, the one that you've mentioned to me, I actually wasn't familiar with that, where an agent on behalf of a vendor, but without listing it properly. When I say properly, like you said, advertising it on the various platforms, I'm going out to a database to see if there's interest there.
Well, if you think about it from an agent's point of view, if I can get in the door to someone who potentially wants to sell their property at whatever price that they want, I have now got my foot in the door. I have an agency agreement, and I can get that listing. And then once we get some feedback from buyers to say, oh, that's not realistic, we can then start negotiating on price from there. So I think it is another way that listing agents or real estate agents that work for the vendor are utilizing to get in the door and get more listings on their on their roster, I guess.
Yeah, 100% spot on.
Great. So mate, as a buyer's agent, do you help people buy homes, or just, because you called the investors agent, or just for investment?
So the business has started just to help investors around the country. We have helped people purchase principal place of residence only on the northern beaches of Sydney. The business is not marketed that way. The name obviously doesn't suggest that's what we do. However, people have asked for that service, and we can provide it purely for the northern beaches. Look, I know most of the agents. I know the area like the back of my hand. It's within like a 20-kilometre radius. I feel like it had some really good value to clients, but the business was not started for that reason. We've got a few owner-occupied clients at the moment, but it's probably like 1 in 10 clients are an owner-occupied client.
Okay, so Matt, if you are dealing just with investors, like how does a buyer's agent add value to, say, a novice investor who's looking at buying their first investment property?
Yeah, so a typical conversation that we would have with a first-time investor is getting an understanding of what their end goal looks like. So there's a reason why sort of 90% of investors get stuck at 2 properties or 1 or 2 properties, and that's because they're not thinking about their end goal and the best way to get to that end goal. So what I mean by that is, if you have an $800,000 pre-approval, usually going and buying an $800,000 house will cap you out serviceability wise, and you're not going to be able to leverage into number 2 and 3 for quite a few years, or until your income increases substantially. You might be better off buying a $500,000 property, which is neutrally geared or positively geared, waiting 6 or 12 months for that equity to go up in value. And because it's neutrally geared or positively geared, that adds to your serviceability, and you can leverage into your next property. So at the very beginning, that's what we discuss with our clients. Now, we need to be really careful. We're not financial advisors, we're not financial planners. However, if a client does want to reach a passive income target through property, we can just tell them how many properties they need to get there. That's about as far as our information will go. So that's on the surface level what we do before a client joins. After that, we've got a good idea on what they're looking for. We then go do all the inspecting, all the negotiating. As I mentioned, off-market properties we'll present to them. We introduce them to the property managers, the building and pest inspectors, the conveyancers. We're familiar with the laws around the country as to what the best way to get a deal done in a specific state is. Pretty much look after that entire process. With anyone that's buying a property, they have no time. They're normally working 10 hours a day. 11 hours a day. They're quite time poor. So the idea is we'll just look after the entire process from beginning to end.
I think for me, one of the biggest advantages of using a buyer's agent, especially when you understand that property is a tool to help you achieve some kind of financial goal, like you said before, Bobby. You sit down with a client, you understand where they are today and what levels of passive income they'd like to try and achieve through property, and then you build a strategy around that. And often that's a great starting place, but then the human emotions can often get involved. And humans have an ability to make so many different mistakes, because that's just part of being human, especially when the emotions get involved. And when you use a buyer's agent, you understand that property is a great tool, but when you take out the emotion out of the process, it actually becomes an even more powerful tool, especially when you're working with the right people to help you build the right strategy and then implement that strategy. Because you hear it all the time. You go and have a look at a property, an investment property, and you're there with the family, and they're like, "Oh, but I wouldn't live here. Oh, I don't like that kitchen. Oh, that bathroom color. Oh, no way. I don't want to. No. And you're sitting there going, "The numbers make sense. Yeah, but I wouldn't want to live there." And you're like, have you experienced that?
More often than not, a lot of the time we do have a client that said, "Oh, my cousin or my auntie bought a property there, 11 years ago, or we went there 10 years ago and sort of didn't like the feel of it, or I know a friend's cousin's uncle bought something there and didn't perform." So you do have those emotional, I guess, thoughts that come in with a property, and I guess that's expected, especially with investors that are at the beginning of their sort of investing journey. And I guess that's up to us to educate them and try to take the emotion out of it. But at the end of the day, if we can give as much numbers and stats and data as we want to a client, if they can't rest their head at night being comfortable with that process, we'll put them in a different market that they're 100% comfortable with. Because you got to enjoy, look, it's going to be a 20, 30-year process. You need to enjoy that 20, 30-year process.
I think you hit the nail on the head when you said the education part. That piece is so important with any investor, because the more you equip yourself, you invest in yourself and understanding your role as an investor, but also understand that we're human beings, like I said before, and the emotions make us human. But it's when we allow that to get in the way of making sound decisions can be a challenge. But that's why for me, I think working with a buyer's agent can really alleviate a lot of that stress. You have somebody who's walking with you who understands the emotional roller coaster. You're spending a fair bit of dough. You're investing a fair bit of dough. But I like what you said before, Bobby, too, making sure that your clients, when they make a decision, they can rest easy. It's not, oh my gosh, tossing and turning. Nobody wants to be like that. Yeah,
and I guess if just an everyday person wants to go out and buy an investment property, they've got to do all of that research, plus have their own job and family and all the other lifestyle limitations that you already have. And then to go out and look at spending, if you're going to go and buy a property for $500,000, that's a big chunk of change. And that's on the low side of what you can buy property for in Australia. To think that you're not going to be putting in 30, 40, 100, 200 hours into actually finding the best way to spend that. But people just don't. But also when you use a buyer's agent, you just don't get that one person. You get their entire team, their network, all the years of experience. And, Joe Citizen probably buys 2, 3 properties in their entire life. Buyer's agent, they're buying like hundreds, if not thousands of property over their career for many, many people.
Yeah, spot on. I think you guys definitely hit the nail on the head in that regards.
So Bobby, we talk about Bricklet here. Mate, what do you think about Bricklet as fragmented property inside that property asset class for investors?
Yeah, I think it's an amazing opportunity. As property becomes more and more expensive, the value of Bricklet is only going to increase more and more. As it becomes more unattainable to the average person, it just makes it more achievable for the everyday sort of person. So I think it's an amazing opportunity, and things like Bricklet is sort of proof that I can't see property sort of correcting shouldn't say corrects often, but seeing the corrections that we do see in America and whatnot, I think there's too much backing in Australia for property and too much dependent on the economy with Australian real estate. And then when companies like Bricklet get involved and make it more affordable to the everyday person, that just drives up more and more demand. But I think, yeah, like I said, for as it becomes more and more expensive property, I think it's an amazing service.
Great. I mean, for the Australian property market to have a decline like we saw in 2008 in UK, Ireland, in the US, we would have to have a dramatic oversupply of property being built. And as sort of property developers, we going through that approval process with local councils, and it's like pulling teeth. To get an oversupply of property being built in Australia, you would have to have significant restructuring of how those got approved. And also a lot more land would have to be supplied to developers to be able to grow. So I just can't see that happening, even though we are a huge island with very few people on it. There's not actually that much capacity in terms of being able to just build a whole lot more houses. And that's why I just really can't see that oversupply happening. And during COVID, obviously, we have issues with obviously no immigration coming into Australia. But I would suggest that the queues of people waiting to get over here are going to be enormous. And from some of the announcements from the Morrison government, as soon as the COVID-19 pandemic passes, they're going to be opening the floodgates and bringing in all of those people that were already approved, plus more, because I really want to get Australia back out of the current recession that we're sort of in, and then back into growing. We've been very lucky through 2008 GFC and also the global virus crisis that we're currently in at the moment. You know, the Australian economy and people, we are still living very, very good lives. Very, very fortunate. And yeah, I guess the government is going to continue to steer the ship to see that that's going to continue. And that will be through continued immigration and then obviously growth in the economy. And if those two things happen, they are primary drivers for property to continue to, at the minimum, hold its value, if not to continue to go up at least inflation plus.
100%, I agree. Look, I think historically the Australian government relies on immigration and property to sort of get out of recession. Every economy relies on immigration, relies a lot on immigration to get out of a recession, and that's sort of historically what the Australian government's done. So you hit the nail on the head in that regards. And as immigration floods in, construction ramps up, and you get more properties, get more people. That's how you sort of see get out of this recession. And you're right that we are extremely lucky with how we've dealt with COVID and I'm 32, and I haven't touched wood. I haven't really sort of gone through I mean, technically we're going through a recession, but it wouldn't feel like it. It's unfortunate for those in retail and hospitality and tourism who would be really struggling at the moment. But you know, apart from those three that are three really big industries, sort of a lot of people we're speaking to sort of have gone through this crisis scratch-free.
You know, it's. I mean, when you look back to last year when we first were introduced to the whole COVID thing, and there was a lot of negative sentiment towards property, a lot of the big hitters forecasting significant decline in values, and now we're going through another serious phase of COVID in this country again, with even stricter lockdown measures have taken effect, and yet property seems to be at this stage still so resilient. I was reading just yesterday some numbers around for every 100 properties that are being listed, there's 1.4 or whatever it is being sold. So the supply cannot keep up with the demand, and how there is a swing of attention now from housing because there's just not enough supply of housing to apartments, and how Australians are looking outside of the typical house, which is the Australian dream, the idea of an apartment as either an investment or a house to live in. And are and we're all talking about what's around the corner with spring season, often the busiest time of the year as far as real estate, and a number of our colleagues in the real estate space are telling us they think this coming spring season is going to be pretty busy. Would that be your sentiment as well, Bobby?
Yeah, definitely. And just to touch on what you mentioned before, apartment prices over the past 2-3 months, I'll just talk about northern beaches of Sydney.
Yes.
Because we don't necessarily buy apartments sort of outside of the northern beaches of Sydney for investor clients, but northern beaches of Sydney, I know the apartment market very well, so that's all that I'll comment on. It has far surpassed the house price growth over the past quarter. The apartments as opposed to the houses, the growth has been a lot more, and that's just because of that demand. So obviously, when house prices get to a point where they're unaffordable, some people will move further away into less desirable areas, but majority of the people will move into apartments, 3-bedroom apartments, large 2-bedroom apartments. Like there was one that we were trying to get for a client last year in October. It was about $700,000, $780,000 purchase. Now comparables are going for 1.3, 1.4 on the same street, literally in less than 12 months. It's just a simple 3-bedroom in DY on Oaks Avenue. I'm not sure if you guys obviously know DY, but a lot of the listeners might not. So you're just seeing some crazy amount of growth in that market. But in terms of what we sort of expect in spring, we think there'll be a bit more supply that will come onto the market, but nowhere near enough to dry up the demand that we're seeing. So it is going to be a very busy spring. There'll be a little bit more supply, but definitely nowhere near enough to dry up that demand.
Mate, with your clients, do you do or help them implement any active property strategies like sort of renovation or adding a granny flat, or do you do any project manage any subdivisions with your clients?
Yeah, really good question. So we don't project manage anything. We do have clients that want development sites. We can help them find that. We do have clients that want something with granny flat potential and whatnot, and we know which councils you can do granny flats, which councils you can't. So we have our finger on the pulse in that regards. Our general, this is really general, is general in nature. When the market's booming as it is, we tell our clients there's no need to try manufacturing equity. Spend that money on buying a second property if you can. Because it doesn't matter if you add another bedroom, if you do a granny flat, the market, if it's going up at 20% a year, you don't need to spend that money on manufacturing any equity. But a lot of clients will purchase something, so when the market does go through a correction or does stagnate, they can then add value, whether it's another bedroom or a granny flat, something like that.
Interesting.
Yeah, interesting. That's a good strategy. Yeah, great.
So whether it's investing in a whole property or investing in a property fragment, such as the property fragments available on the Bricklet platform, I guess when you're looking at investing in property generally, Bobby, what would be some of the key things that you would look at in evaluating an opportunity to see whether or not it's something that's worth considering?
So in terms of like fundamentals for a good investment property?
Just so our audience can, from yourself, what kind of characteristics you would be looking at, or what are the things that you would be looking at in order to help you make a decision? Yeah, so we look at like short-term fundamentals or short-term triggers, I should say, for house prices, but then we also look at medium to long-term triggers. So I'll start with the short-term, and look, the reason why short-term is important is because if that market moves in the short term, then you can leverage off the equity to move into subsequent properties. So things like looking at which way the days on market within a suburb is trending, having a look at percentage of stock on market, which way that's trending, having a look at vacancy rates, tracking your rental yields, that will tell you your holding costs. If the market's big enough, you can track auction clearance rates. So there's some of the short-term triggers, and what's a really simple thing that the listeners can do that will give you an idea on what that market's doing in the short term is if there is an increase in stock on market or an increase in listings, but then the days on market is trending downwards, that tells you that there is lots of activity in that specific suburb and there's far more demand than there is supply. So that's just a really, really simple one that you guys can, that listeners can do. They can find most of that information online as well. I'm pretty certain they can. I check it on we've got like RP data and price finder, but I'm pretty sure you can find that stuff for free. So that's something really simple. In terms of long-term house prices, which is what's going to create real wealth, obviously things like population growth, looking at things like economic drivers within a suburb, economic changes, infrastructure. These are the sort of things that are extremely important. Matt touched on it before as well, land scarcity. So if you're buying in areas which have land scarcity, then obviously there's limited supply that can go into that area.
So these are the sort of things that you look out for to sort of pick a good investment property.
That's terrific.
Great. Mate, what is the best investment you have made? Maybe not personally, but maybe for a client, but what's the one when I say what's the best investment quickly pops into your head?
Oh, put me on the spot.
Mate, besides the engagement ring for the wife, what's the next one after that?
We did one in Deception Bay. I don't know if you guys know Deception Bay, just about 40 minutes north of Brisbane. And for Sydney-siders, these figures are nominal when you compare it to a Sydney house price. But if you sort of look at it relative-wise, then these are the sort of numbers. We purchased it for $302,000, about 500 metres from the water. That would now get valued. That was in November last year. That would you can't find anything for under 400,000 in that market now. Nice. So probably over 25% in less than 12 months. Had side access for a granny flat. So that was probably the best. And look, that you sort of say 100,000. What can $100,000 for a Sydney side and Melbourne side? You sort of think 100 grand, it's 100. But if you've got 5 of those properties, or if you've got 7 or 8 of those properties, and you're getting that 20% growth, it stacks up. And the beauty of, I guess, a property like that is you could own 5 or 6 of them, and it has no holding costs because they're positively geared. So that's probably the first one that came to mind.
Yeah, great. Mate, what was the yield on that one, if you don't mind me asking, roughly?
So that was tenanted at $360 per week.
Okay.
302 purchase. That would be rented for more now, but when it was purchased, it was $360 per week.
Great. And then if you put a granny flat on that, you're going to get like another $150, maybe even $200 a week for like a 2-bedroom granny flat, probably.
You probably get about $280, $290.
$280. So we're talking about.
So you're going to spend another 120 grand, and you're going to bring in another 280 grand, 280 bucks a week.
Yeah.
Maybe
and and what I tell clients about granny flats is they sort of say, oh, but I got to spend 120,000 to get 280 or whatnot. And it sort of sounds just the numbers again, especially if you're from Sydney and Melbourne, you're like thinking, oh, it's only another $280. But if someone had told you, to spend $360,000 on a house, and then you'd get $700 per week rent or $800 per week rent, because if you times that by 3, that's the same numbers, right? You would jump on that in a heartbeat. It's like a 12% yield, 13% yield.
That's right. I know. I'm the same as you, Bobby, because I look at the yields. Where do you get 12 to 15% yield? Where can I invest 120 grand and get nearly $15,000 a year in income? You just don't get it.
Exactly, that's right.
The banks aren't offering it to us.
Exactly, that's right.
That's definitely one of the reasons that we love property so much, is because you can intrinsically add that value that people can't see, and then significantly increase that yield. Nothing that I personally do is going to increase the yield in Commonwealth Bank unless I continue to put my the money in my kids' Dolomite accounts. But that really doesn't move the needle.
Long time, Matt.
In terms of that dividend that gets paid to us. And when investing, capital growth is great, but it's that income which funds your lifestyle. So I talk a lot about financial security and what financial security means to different people. For me, it's the ability to have residual income streams that fund my lifestyle. Once you achieve that, that's what I call sort of financial security. And then you can enjoy what you've already had a chance to enjoy, of time freedom. You don't have to get up and grind out that 9 to 5, because your life is being funded by these passive investments, or these investments that you have. I don't really like using passive investments, because as soon as you stop worrying about them, they usually tend to give you some trouble. So investments, you always have to be, looking after or having a focus on.
Yep.
I shouldn't really think about it as passive. You always need to be keeping an eye on it. No one cares about your money as much as you do. But yeah, yield is just such an important thing. And the quicker that you can achieve that financial security, or that residual income being paid to you, the much less stressful life is, I find.
100%. I'm in the same boat as you, mate. For me, we speak to a lot of people that are equity rich, and you need that equity to leverage into future properties, but they're working 12 hours a day, 6 days a week, just to pay off all their debt. And that's not the path that I personally want to go down. They might have millions of dollars of equity, but they're just working to pay off that debt. So for me, it's definitely to create a passive residual income, I should say, not passive.
Yeah, residual.
For me, it's to create a residual income. So look, if or when the property market settles down, because it obviously will at some stage, when the property market settles down and we're not as busy as we are, it's not going to be a stress because you've got passive income coming in. Or when something happens in your life or in your career, like at the moment, Dee, my wife, she's on maternity leave. We're quite, if we had a heap of property which was costing us so much to hold on to, she would have to take 3 months off and go straight back to work. Because we've got property that's generating an income, she can relax and spend the time with the family to help raise the kids.
And it's one of those things, time is the most valuable resource that we have. And once it's spent, you can never get it back. And
it's a perishable commodity.
Yeah. And I know myself, being self-employed and having the flexibility to spend time and go into the kids' classrooms back in when we were allowed to do that and read and teach math. Year 2 math can be challenging. They changed math. No one told me that. But, these things, like your son or your children just love it when you come in and be able to do those things, like coaching the kids soccer at 3:30 in the afternoon. These are times that I'll never be able to get back because my children are only at this young age for such a short period of time. And I think so many of us in those vital years of, in our early 30s to 40s, we really are very career focused. We're climbing that corporate ladder, we're paying down the home loan, we're really trying to reach those financial goals that we think is going to make us happy or fulfill our lives. When a lot of the time when you speak to older people and you think, the best memories that they have is those times spent with the people that you love, doing the things that you enjoy. I really hope that everyone can get to the point where they can really be enabled to enjoy those moments and be focused on them.
Yeah, it's good.
Mate,
you told me that. Like I remember when we caught up a few months ago, that resonated, like it stuck with me when you mentioned that to me. You were like, I was sort of asking you for advice with you've got a few kids who are older than mine, and I was sort of saying, what's your advice? I'll take anything on board. And that resonated with me where you said, look, if you could walk your kids to school or walk your kids back home or go to them to go for soccer or ballet or whatever it might be, they're the sort of memories that you want to try create.
And the interesting thing was when my second son was born, Stefan, I was coming into a bit of a fork in the road in terms of like career and work, and then also family, and just trying to juggle everything. And I was just grinding out so many hours, just really trying to just make as much money as I can. And I actually had a coach come in to give me some executive coaching on my business because I just wanted things to go faster, more profitable. How do I just really get this thing cranking? One of the first things that she actually did was get me to write a list of priorities, my values. So listed out what are the top 5 values in my life. And then once I did that, then a week later, she then got me to then write out my diary and then allocate the times that I'm spending with my values. And then I looked at that and I was like, my family, I'm spending no time. So I was spending Sundays, basically Sundays, and then dinner time, and then after dinner back to work. And it was at that point that she got me to realize that it was like, you're not happy, you're not feeling fulfilled, not because your business isn't doing great or any of those things. It's because you're not living in line with your values. So you need to readjust your perspective on that and start allocating that precious time into the areas which you are going to get the most value, or you're going to get the most enjoyment out of, and then work everything else around that. And I did that, and I started taking my kids to swimming lessons and all these like little things, but it's only a small adjustment. But the happiness factor in my life, like it's just tenfold, just 10x. And then from that, the business then goes well. Everything just sort of comes together. So It's interesting, and it's another one of those things where, when you're stuck doing anything, you sometimes just can't figure out how to get out of whatever funk you're in, and having external people, coaches and mentors and people around you to come in and sort of really give you some be a sounding board or give you some advice around that is just so important. And it's definitely paid dividends for me in my life. So I'm not sure how we got onto all of that, but
that's good, Matt. No, I'm pumped. I'm excited, mate. That's awesome.
So, mate, just before we go, mate, are you reading anything at the moment?
I'm reading a book called Digital Minimalism, and it's going terribly because I've probably never been more attached to my phone and technology than I am right now. So it's obviously not. I'm like similar to what you just mentioned, Matt. Like coming to the office at 5:30, leave at 5:30, spend an hour and a half with the family before the little one goes to bed, and then back on the phone again, back on the computer again. So it's just it's a crazy time, but I'm reading Digital Minimalism to hopefully get away from technology a bit more than I am now.
Sometimes it's not the amount of time that you spend with people, but it's about the engagement that you have. So if you only have that hour, so my advice to you as a buddy, I guess, is just to throw the phone away, lock it up, just get it away, and then just 100% focus. That definitely paid dividends in my personal life, and I learned to do that. I still struggle with it, but trying to implement that. Mate, do you have a favorite book or anything you could share with our listeners? It could be either investment related or just personal.
Favorite book would probably be, the book that changed me the most when I read it was probably the 5 a.m. Club. I'm not sure if by Robin Sharma it was. Have you guys read that one?
Oh, I haven't read that
one.
I
haven't read that one. I'll add that to my Kindle.
I'll check it out.
Yeah, that one was it helped me a lot. That's probably, I won't go through, I've got heaps there, but that's the one that stands out to me the most.
That's cool.
And mate, are there any other podcasts other than ours, obviously, that you're listening to on a consistent basis?
Well, obviously, your podcast comes top of the list.
Thanks, Bobby.
Look, I used to listen to like every single episode on smart property investment, every single episode on the property couch, every single episode on property investory, like literally just 8 hours a day, 10 hours a day. I was listening to that. I don't anymore, to be honest. I haven't really listened to a podcast for quite a while, but if I do get some time, I try to get into some audiobooks.
Yeah, cool.
Yeah. Great.
Awesome.
Ray, was there anything else you wanted to add or ask?
I think that was a great session with you today, Bob. We really appreciate your time, mate.
Yeah, thanks so much for your time.
No pleasure. I really appreciate you guys inviting me on and giving me the opportunity.
And when we can get back into the gym, I'm looking forward to pumping some iron again.
100%. Look forward to it.
And some of that brisket barbecue you mentioned before, before we went live.
There's plenty of them as well when life goes back to normal.
Sounds good.
Cool.
Thanks so much, Bobby.
Everybody have a great rest of the day. Thanks, Bobby.